All right. Hello, Ankit. I just got your message and I'm replying here with thank you and welcome everyone. Good morning, good afternoon, and good evening, all of you from whichever part of the world that you are joining me in. Uh, my name is Harsh and I will be your host for the next 60 minutes or so. And I'm getting quite a few messages of knowing each other now because we have been doing this series since last 3 to 4 months and it's catching up well. Yeah, thank you, Lewis. I was just about to ask the question if you are able to hear and view the screen properly, and you already answered. I don't know if you're viewing the screen properly. I think I paused it just a moment. Maybe now you should be able to see the broadcast of the screen as well. Uh, you should be seeing the presentation mode, all right? All right, so once again, a warm welcome to all of you from all the parts, different parts of the world joining me in. It is 6 p.m. My time now, and once again, morning, afternoon, and evening to all of you from wherever you're participating. And let's get started. I would like to make a couple of announcements. This presentation we have been doing since last more than 12 to 16 weeks now, and we have done it over and over again, which is the basics of the wave principle. And as I was talking in my last presentations, I will be coming up with new versions, new advanced versions, detailed versions, let me put it this way, of the wave principle, probably mid February, because I will require at least 15 days to announce the new presentation slides. So it will be either done in the mid of February 2019 or maximum by March. So before the first quarter, we will announce new CDs for the technical educational program. And do not forget, the other side will continue as it is. That is the live trading sessions, which I'm doing alternate with the educational session here. All right. So, for example, today, if I'm doing the presentation mode of the wave principle, next Tuesday, that is 29th of January, same time, I will be with you with the live trading strategies where we will focus on what we have learned till now and also uh, do some live analysis and find out potential trade setups for the Euro USD, gold, the dollar index, Dow Jones, uh, New Zealand dollar, any other pair that you want me to analyze. All right, and we'll be doing it together. So stay tuned with these two series, and I promise you to add more in the coming weeks. All right. How can we enroll to the live trading session? Louis, you just need to enroll the way you did for this session. There is, you'll find the list you'll find that on the webinar list, and you just need to enroll as you did it right now. It's absolute the same process. All right. And I will be coming up with new events and new ideas online. So keep a watch on the webinar section and all the announcements there. All right. Thank you once again for your patience for these two announcements. Ankit, I don't know if we have met earlier. The question about legality is not a question. The education is absolutely legal across the world. Now, trading forex is a question that I'm not going to take in the educational part. All right, please excuse me for that. I'm here to educate here the wave principle and the live training session. So please do not let me not go beyond this focus. I hope you don't mind. We can address this question some other time. All right. Thank you so much, Ankit, for your understanding. And I have been an educator since last 10 years from now. Uh, and that is what I've been doing, and that's what I'm good at. So let's get started, brothers and sisters. And again, for the next 60 minutes, this is your platform, and be free all the time, anytime to ask me questions regarding the subject that we are touching base here, and I will do my best to address all the issues and questions regarding the wave principle and understanding the basics of the wave principle. Again, I'm sorry we are not coming up with advanced too soon because I have recently started seeing audience coming in and getting tuned with these basic sessions. So I will be taking a couple of more, and also do not miss out the live sessions. All right. All right, I will ask the management about the past videos, and I would also like to make an announcement here that please do not worry. We are not authorized to pass on the PDF files of the presentations, but I am going to talk to the management and ask for the videos to get uploaded. All right. My name is Harsh, Harsh. All right, and I'm just your colleague, Mr. Matthew. You can take me as your friend, all right? I'm very passionate about this subject, and I don't like calling myself as a professor or an educator. I just deliver what I'm passionate about. So let's get started. We have already 7 minutes past six now. Uh, Mr. Dilip, I'm from Gujarat, but let's focus on what we are here for, all right? Thank you so much. Yes, this strategy is applicable everywhere, but at least let me begin with the strategy, my friends. If you allow me to start, uh, we can take all the other questions as time passes on. All right. I don't know why people are more interested to find out where I am from. Is that going to make any difference? I don't know why. All right, this is the agenda for the day. I have one humble request to make to all of you friends here. I'm having one screen here, all right? So when I take your questions, my presentation is paused. All right. So please ask me relevant questions related to the topic. I mean, it's not going to make any difference whether I am from Poland or from England or from Czechoslovakia or from any part of the world. All right. So let's focus on the agenda, my friends. We'll spend some slides to discuss the brief history of what this wave principle is all about, and I'm 100% sure that most of you must have heard about the Elliot wave principle, and also many of you must have heard that it is too complex and too difficult for a trader to first of all understand, and secondly to implement what it is based on. All right. The truth is exactly the opposite. Believe it or not, the truth is exactly the opposite. Uh, because I came by suddenly and I've not found any difficulties since last 3 years. Yes, if you want to learn a subject, you will have to put your time and effort on that, and that applies to everything under this planet Earth. All right. So we'll touch base on the basic pattern, and then we'll touch base on the rules, on some of the rules, not all the rules or guidelines, but yes, some important rules that we need to follow. All right. And then we'll try and discuss a story which I cannot do on a whiteboard. If I was doing a seminar, I would have done on a whiteboard, but I will do that story on a presentation format to help us all understand the fractal nature of the markets. I'll be talking in a very simple language, no jargons used. It's going to be a story flow. So please sit back, relax, and enjoy your session. And whenever if you have doubt about the subject or the topic, please feel free to ask me and try and address to my level best. All right. At the end of the presentation, I would like to discuss some of the trading strategies which are absolutely 100% practically tradable and executable. I repeat myself, 100% practically tradable and executable. It's not just on paper. All right. So let's get started. By the way, those who ask questions, I'm from India. And if you're from India, Namaskar, Sasrikal, Adab, everything, and all my love goes to all of you present here. All right. So that's the first slide, which is the most important slide, and I cannot stress it any further. We all need to understand the basic rule by which the financial markets are governed or they are moving. First things first, most of you have heard that the news, the economic, the fundamental, the geopolitical news or events which are happening across the globe are the ones who are moving any market. Now, let us not talk only about Forex. This is just about any market, right? It may be Forex, it may be gold, it may be crude, it may be indices, all right? Any financial markets, you have been tuned or programmed to believe and understand that they are moved by the news which are coming out in the market. Believe it or not, that is the biggest myth if you are under that belief. You need to come out of that first. If you lay your faith on me for the next 60 minutes and at least follow it up with me in the next session, that is live session next Tuesday at this time, your belief system of market moving in the news flow will change. And the truth is financial markets are pattern, that is anything which is happening outside the chart or outside their trading room is already being accounted into the price action. Let me repeat myself. It is already accounted, it is already discounted into the price action which is happening on your screen. So, if you only focus on what is going on the chart patterns, what is going on the price action, you actually need not focus on what is happening outside the world. We have a question and I was expecting. It's very common. Mr. Win, I think if you're not seeing any screen, I think there must be some local problem, but all of our friends and colleagues are okay with the screen and the audio. All right, now you see, so I'm very happy. So let's continue. All right. So what is the truth is this. You need to understand and listen to this carefully, please. Market movements are pattern. That is, they move in a specific format. They move in a specific identifiable pattern. The patterns are not random. The markets are not moving in a random way. Don't say, I didn't know and this happened. I was sleeping and that happened. No. This is the layman's language. If you are technical, you will get a reason of what happened and why. All right. So you need to believe, you need to have a faith in this slide first, that financial markets move in a particular structured pattern which you can identify. I'll answer this question in one moment. Let me complete this first. They move in a specific pattern. That is point number one. And point number two, which is even more important for us to understand, that these patterns are repeated over and over and over and over again. Do you understand the importance of this slide now? Once you are through with this belief system that they are pattern and the patterns are identifiable, point number two, the patterns are everywhere. You can see the patterns on every degree. You can see the patterns on every time frame. All right. The only thing you need to do is just sit on your chart and spend time with it. You identify the pattern and go according to the trading strategy that we are going to discuss in a while. All right. Now let me try and take this question. Mr. Sablin, thank you very much and welcome to the presentation here. Let's continue, brothers. All right. This is the gentleman which we all need to thank for. If you aspire to become an Elliotian, this is the gentleman you need to thank, Mr. R. N. Elliot. He is the one who observed Dow Jones meticulously for several years, and he's the one who laid the principle which is known as the Elliott wave principle in 1938, after having worked for about 8 years observing the pattern. The main thing that he derived was markets do not move randomly. Markets do not move on the news flows that are coming in and out. Markets actually move based on the mass psychology of traders, the mass psychology of the participants. They move in the direction of trend and they reverse in the other side in what is called, what I said in the last screen, the recognizable patterns. So what you need to understand is these patterns are recognizable if you know how to recognize them. All right. So that's the only focus you should have. And they are called as waves. Now, the other beauty is that the smaller version of those waves, listen to me carefully, the smaller version of those waves are very busy building the larger version of the similar wave patterns. If I give you another crude example to understand in a very simple way, when you start, when if you want to build an entire building, all right, it's not going to come up in one stroke. Do you agree with me? It is going to come up step by step, one brick at a time, brick by brick. You will build a wall, and then you build a floor, and then another brick by brick, another floor, and then another floor. So each brick is the small wave which is working to build the higher framework. All right. Yes, my dear friend, you'll find the webinar recording on the website, please. You'll find the webinar recording on the website after the presentation is over. It will take a while, at least 2 to 3 days. Please wait for that, and you will find it on the history of the webinars page. The link for the historic presentation is visit the website and go to the webinar section, and you scroll down, you will find the history of past webinars and you will find it there, right? Yes, Mr. Lewis, I'm trying to discuss, trying to talk about the fractal nature. You're absolutely right. All right, but if I talk that the markets are fractal in nature, the basic it doesn't go into the head so easily. That's why I'm giving a simple example that brick by brick a wall is built, then a floor is built, then another floor is built, and then another floor, and then when all the floors come together, they are just one part of the building. That's what it means. I hope that this gets into your subconscious mind easily. All right. We will understand what the fractal nature of the market is just in a while we are moving forward. All right. So that is the wave principle. You need to understand two things, that they are recognizable patterns and the patterns repeat themselves. All right. Sure, Mr. Simon, I will try and do that, but my nature is slightly different. Sometimes what happens is a person is asking question and it looks very arrogant if I'm not taking. So I will take questions, but I will take after completing a particular topic. All right. That's a good point. All right. We still have around 40 minutes and we still have enough time to complete everything perfectly well. So here's the basic pattern. Let's take an example that the market is wanting to move on the upside. That is, the action that it wants to take is on the north side. All right. I'm not talking about trends because we don't know what is a trend right now. So let's talk in a very basic thing. If the market is wanting to go up, let's say that's the major direction it wants to take, it will move in 5 waves, labeled as waves 1, 2, 3, 4, and 5. Or I must use the word not labeled, they are called as waves 1, 2, 3, 4, 5, and then they are labeled as 1, 2, 3, 4, 5. That is numerically. All right. They are labeled in numerics 1, 2, 3, 4, 5. So that is the basic pattern where the market is wanting to move on the north side. Ideally, after the 5 waves movement towards the major trend, which is north in this slide, the market or the price action would ideally form or fall 3 waves down, and that is labeled as A, B, and C. Please remember, whenever there's a 5 wave movement, that is what the market is wanting to take as a major direction. At least for now, as a basic understanding, you can take that. It could also be a part of correction, but for now, let's keep things simple. The major direction, when the market is wanting to move in a major direction, it will move 5 waves in that particular direction, which is labeled as 1, 2, 3, 4, 5. And after the 5 waves movement is over, ideally it will correct itself into 3 waves, A, B, C. I've used the word ideal because there are other patterns, but ideally it moves in 3 waves pattern, A, B, C. All right. Uh, Thank you, Mr. Tuzar, and thank you, Mr. Simon. Both of you are right. Let's not be focusing on what we are supposed to. Let's focus and continue on the basic pattern, sir. All right. Love you all. So once again, 5 up, wherein the major direction is on the north side, which is followed by 3 down, which is labeled as ABC. All right. Let's go a step further. So this is what we have done. 5 waves up when it wants to take a major direction on the upside. After the 5 waves, it is normally corrective. Ideally, 3 waves down, labeled as ABC. What you need to remember as a nomenclature. Let me please clarify. It is only used if you want to get certifications or you pass examinations. Otherwise, you can label any way that you want. This is the standard labeling that I'm showing. 1, 2, 3, 4, 5, followed by ABC. That's the numeric, and that's the letter one. All right. 5 waves up, followed by 3 waves down. The 5 waves up, that phase, all right, is ideally or normally it is called as a motive phase. Please understand, there is a reason why it is called a motive phase, because on the left hand side, on this phase, in this phase, uh, price action is moving with a motive in mind. It has got a specific motive. It is wanting to make higher highs. All right. Let's say the high is 100. Now it wants to break above that 100, print another high, 150, or maybe 200 or 300 or 500. It has got a specific motive, and to achieve this, 3 waves cannot do that. 2 waves cannot do that. All right. So it requires 5 waves. This has been absolutely made clear by Mr. Elliot. All right. So it needs 5 waves action to achieve that motive. All right. So it's 1, 2, 3, 4, and 5. Market, understand, put this in your subconscious. Market is moving with a motive. The price action is going to end up higher than what it was previously. Now, this motive phase, when it's complete, 1, 2, 3, 4, 5, when that is complete, it drops down in a way that the markets are very smart. They want to tell you, or they want to check themselves. And that is why you have an ideal corrective phase which counter trends the market. Please remember, markets are continuously telling us stories. Put it another way, markets are continuously moving in trends and counter trending. Our focus as a trader should be, are we in a trend? Point one, okay, or in a counter trend. If we are in a trend, which part of the wave we are? Are we in the second wave, or we are in the third wave or fourth wave, or what? And we have to trade accordingly. On the other side, if we find out that we are in a corrective phase or we are a counter trend, then most of the traders would want to stay aside, because counter trend is not having a general motive. It is just doing a correction. It is lying idle. It sometimes goes sideways for a while. So traders who are conservative in nature, they don't trade in the counter trends. But the minute the counter trend is over, that is, the minute the market has made a C here, what what follows after that is another 5 waves movement. Please remember, I told you, one brick, two bricks, three bricks, four bricks makes a wall. So when this wave is complete, that 5-3 is complete, another 5 movement could be expected on the north side. So it's a 5-3-5-3-5 structure And this structure, believe it or not, can be seen on every time frame that you're wanting to participate. All right. Swapnil, not necessarily what you are saying is both right and wrong. I would not say wrong because I have seen certain stock markets, if you are specifically trading the stock markets, sometimes corrections are in gaps, but not always. So please don't make it a rule that whenever it has to correct, it will come to fill the gap or it will gap down or gap up. Sometimes during the trend, it will gap up or gap down. Specifically in waves 3 and in the stock markets, you may see a huge gap up or gap down movement. All right. So the answer is both yes and no, but don't be very, very one liner that a correction is always a gap. Always. Sakshi is asking a question. What time frame do we need to view this trend in a month or a year? Uh, the answer to Sakshi is this. Uh, Ideally, Sakshi, you should be watching the hourly chart for the wave structure. But it's very difficult to answer this question because if you are a huge swing trader, that is, if your trading horizon is 15 days or 1 month or even more than that, then you would want to do this on a daily chart. If you are a short-time trader, then you would want to do this activity on an hourly chart. If you are a very short-term trader, you would want to do this activity on a 15 minutes chart. So, to put a general statement, the kind of trading aptitude that you have will be your ideal time frame to watch. The more higher your trading style, more higher in the time in time, higher the time frames you should count the waves. The lower, the more the frequency of your trades, lower the time frame. And but one thing is for sure, these this pattern that we've identified, 1, 2, 3, 4, 5, and ABC will be found everywhere. Only thing is you need to identify that. All right. Alan, Alan, it could be a range phase as well. Yes, you are correct because that's the word I use. Corrective phase could be there are since the question has been asked. Now let me give you something more on this. Corrective phase is not always an ABC. I always use the word ideally it will be ABC. So the corrective phase are of many types. One is called as a zigzag, the other one is called as a flat, and then you have different kinds of flats as well. And then you have triangles, all right. So a zigzag will be a sharp movement. It won't waste much time. A flat will take more time. It is a flat kind of a movement. It moves sideways. A triangle will take even more time to develop because a triangle is not an ABC. A triangle is an ABCDE. All right. So yes, it could be a sideways phase or a range phase. Yes, the answer is yes. And it could sometimes be a sharp fall as well or sharp rise as well. All right, Mr. Allen. All right, Sakshi is satisfied. Ankit is asking a question: which time frame for intraday trading? Intraday will attract more or less a 15 minutes time frame. All right. If you are trading intraday, that is your time frame to act upon. So incorrective waves is not sideways only. Mr. Tuzar, we don't call it incorrect waves. We call it the motive waves. All right. Incorrect is an incorrect word to use. Let's call it a motive wave. But it's okay. Yes, the incorrective waves are not sideways. Mr. Chima, I think it's only your audio which is gone. So kindly check your audio. I think all of us are good here with the audio and the video both. All right, so let's continue with the slide. Okay. So As we saw on the upside, similar pattern is formed on the downside. So if the market is wanting to take a basic direction which is down, then I think I've got a question back again. Congratulations, and I'm very happy for you. So a similar pattern is formed on the downside as well, which is 1, 2, 3, 4, 5. All right, labeled as 1, 2, 3, 4, 5. And then it goes counter trend, which is ideally labeled as an ABC. All right. I have a habit of putting this, what we are discussing, in your subconscious mind. I try to do that by repeating it again and again. Please remember, whichever direction the market wants to take as a major direction, it moves 5 waves towards that. And that is labeled as 1, 2, 3, 4, and 5. Once that 5 wave is complete, ideally it will drop or correct itself in 3 waves, which is labeled as ABC. So if the major movement that the market is wanting to take is on the north side, then it will make 5 waves up, labeled as 1, 2, 3, 4, 5, followed by a corrective drop ABC down. If the market wants to drop lower as a major direction, it will form or it will subdivide into 5 waves lower. The moment you see 5 waves, it should immediately click in your mind. This is just the first step that the market is wanting to take. This is the way the market is going to tell us that, hey, I have moved 5 waves on this side. Be careful. I'm just going to give you a corrective movement on the other side, and then I'm going to continue dropping lower. All right, that will drop maybe at least another 5 waves, if not more. All right. So 1, 2, 3, 4, 5 on either side, followed by an ABC on the opposite side. The trend and the counter trend, and maybe we have another question, Samson. So would it be possible to identify the uptrend wave ahead of its formation? The question, Samson, is this. When let me bring on the screen. Let's say you are here somewhere. Samson, if you are watching the screen, let's say market is here somewhere, all right? We are counting waves. It's a wave 1, 2, 3, and then we have found wave 4. That means there should be an ideally another wave down, which is 5 waves, a wave number 5, before the upswing begins. So yes, the answer to your question is potentially, we can potentially identify that there should be one more wave down, there could be one more wave down before I try to buy the market on the north side. All right. So in this way, if you know how to count waves properly, and if you know the probabilities after that, yes, just ahead or just before a major movement is going to come, you can anticipate that. And that is what is technical analysis for, my friend. That is why I told you on the other slide, you don't need to depend at all on the fundamental news or events that are supposedly going to come out. You should not plan your trades based on the events. You should plan your trades based on the wave counts. All right. Yeah, you are. Heva was typing something. He just said, "Dear sir." All right. And Naz, I'm happy that you are getting it. And oh, my friend James. James, you need to pause your question here. Let me emphasize this very clearly. Any form of analysis has to be done or should be done ideally on a candlestick chart, my bro. Any form of analysis should be done on the candlestick chart. It should not be done on the line chart. All right? Please remember this. It could be any wave concept or theory that you're trying to implement. Make it on the candlestick chart. Let me, do you all want me to help you understand what the waves would look on a live chart? Do you all, please, a few more answers. I'll spend 5 minutes on a live chart and help you understand what the waves look like on the live chart and how you label them. 5 minutes for that, and then we will continue from here. All right. So all right. Just give me. I'm going to spend 5 minutes on the live chart. And if you are interested on the live trading, do not forget to tune into this session next Tuesday, same time. All right. I'm doing a quick live analysis right now, but if you are thrilled to spend a complete session on the live chart, don't miss the next Tuesday session. I normally swap sessions, one theory, one practical on the live chart. All right, this is the chart that you should be watching right now. This is the Euro USD chart, daily chart. All right. Now I'm going to do a quick labeling, two quick wave counts. This is a dropping market. All right. Can you all see that this is a dropping market? Let me do it for you. See, this is a dropping market. Yes, it's a falling market. Now, let us look into the story, how the market has dropped and what way the market has dropped. All right. I hope you can all see the label now. Waves one. And let me put it into bracket, the next one. I'm not looking at the question screen right now. I'm just going to look it in a while, please. Kindly excuse me for that because I want to do the labeling here. I want to finish the labeling and then I'll take your questions. Brothers and sisters, please excuse me for that. So that is wave one, and then you see a corrective ABC, wave two. Let me label that as well so that you understand very clearly. And when you are in the live session, all we do is just on the live chart all the time. Then we don't discuss much theories. So you see wave ABC. Now we have not discussed the fractal nature, but this is the corrective wave 2 and then wave 3. Now before I move that, you need to understand one rule. All right. Now let me bring up that chart here. Let me bring up the rules first. So 5 down, 3 up, 1, 2, 3, 4, 5, which is a motive phase, and the counter trend, the corrective phase. Now this is the rule. Please listen carefully to the rules, and I'll go back on the live chart. Let me see what the questions are. I have a question. How we identify the breakouts in the market? How I'll come down. I'll come back to a question in a while. I'll come down in a question. Yes. Okay, fine. Okay, fine. Please go through the rules. How I'll come back to the question. I will answer your question by the end of the session. Okay. Now, please listen to the rule number one. Waves 1, 3, and 5 are motive, while waves 2 and 4 are corrective. What does it mean? Out of the 5 waves, in the motive phase, we just discussed that there are 5 waves labeled as 1, 2, 3, 4, and 5. Correct? Now, out of that 5 waves, waves 1, 3, and 5 are motive waves, while waves 2 and 4 are corrective. What does it mean to you? What does it mean? Waves 1, 3, and 5 are motive, and waves 2 and 4 are corrective. What it means is this: wave 1, 3, and 5, they will unfold into 5 waves because they are motive waves, and waves 2 and 4, they will unfold into 3 waves ideally because they are corrective waves. All right. So out of the waves 1, 2, 3, 4, 5, waves 1, 3, and 5 are motive. Yes, Godfrey, waves 1, 3, 5 makes higher tops. That is a real basic understanding, very good understanding. But also please remember the sub waves. When I say they are motive, means they are moving 5 waves. So please remember waves 1, 3, and 5, they unfold themselves into 5 waves, and waves 2 and 4, they unfold themselves into 3 waves ideally. All right, that is the first general rule. Let's look at the next one now. Wave 3 is never the shortest of 1, 3, and 5. Please remember. So if the first wave is of 100 points, the third wave is of 98 points. How many points should the wave 5 be so that the second rule is not broken? If the first wave is of 100 points, if the wave 3 is of 98 points, how many points do you think wave 5 should be so that the second rule is not broken? Exactly, Mr. Tuzar. It should be less than 98, period. All right, it should be. I've got many answers. Isila James, all are giving answers. Wonderful. It should be less than 98 if this wave has to be the way that we're discussing. If it does not follow, that means it is doing something else. All right. So it has to be less than 98 in this case. You understand? All right, let's go the third wave. Now, these are very important rules that you need to remember. This is another important rule. The second wave cannot retrace more than 100% of wave 1. Now, those who are very new, those who don't know what the meaning of retrace is, let me put it in a very simple manner. Wave 2 cannot go below the starting point of wave 1, period. Is it simple to understand? Wave 1, let's say wave 1, I can show you the wave 1. Let's say wave 1 is from 0 to 100. All right, wave 1 is from 0 to 100. Wave 2 cannot go below 0. All right, got it. Yes, thank you, Swapnil. These are very important rules, and believe me, these are rules. These are not choices given to us. If the market is not following the rule, then it is not doing this thing. It is doing something else. Another reason, let me tell you, another reason why traders fail or why traders lose money is because they are not bringing the required objectivity on the trading desk. When we are trading, we have to be objective. Objective means what? This is a rule. Is it being followed? If it is being followed, market is most probably going to do this or this. If it is not being followed, market is going to do that or that. So you eliminate those two possibilities and you stay with these two possibilities. Then you find out which is more likely to happen, and then you go with that possibility. This is called as objectivity. All right. So if wave 3 is the smallest, that means you cannot tell the market, oh, why have you made wave 3 the smallest? The simple rule is wave 3 is the smallest, so your labeling has to be changed. As simple as that. All right. That will bring the objectivity to your trading, believe it or not. Demilier, wave 3, rule 3 is very simple. Rule 3 says that the second wave cannot go beyond the tip of the first wave. Let us say the first wave began at 0 and it ended at 100. That's the wave 1. All right. Now, wave 2, when it drops, it cannot drop below 0. All right. That is the rule number 3. Okay, let's take rule number 4 now. All right, that is very simple. Wave 3 terminates above wave 1. Another interesting rule is here. Wave 4 never enters the territory of wave 1. Now, this is not all the time applicable, all right? So I'm not saying it has to be, it has to happen all the time. It only happens in an impulse wave. I will discuss impulse wave in a separate presentation. It is very long to cover in this session, all right? But the first three rules are very important for us to remember. I will go on the live screen, but I want to complete the presentation, the basic part of the presentation, so that you understand what the fractal nature of the market is. Now, I am putting a question here. Before that, if you have questions, question to rule number 3. If wave 2 retraces more than 100%, does it mean that we are still within the wave 1 or wave 1 doesn't even started? Michael, most probably wave 1 doesn't even start. Maybe we are into a corrective phase, uh, or we are into a flat wave 4 or something like that. If wave 2 is dropping below wave 1, then the setup is not wave 1 and wave 2 at all. It is something else. All right. All right. Thank you. Now, please, if you have all understood what we have discussed till now, I am posing a wave count here. All right. James, yes, we can spot from wave 1, but that is a very aggressive way to trade the market. All right. It's a very aggressive way. If you are an aggressive person, I believe that you are an aggressive person in life, maybe that's why you're asking this question. But it is, yes, it is possible, but it is very aggressive. It is risky. But traders, if you're an aggressive trader, you would want to take that risk. It is possible if you are able to count your waves correctly. Ankit, how to count first wave correctly? Let's do an exercise here. Maybe your question is answered. All right. I have to answer a breakout question which was asked earlier, but that is out of the domain right now, so I'm not focusing here. A breakout is normally of the sideways movement. I want you to do this exercise, everybody. I have given a wave structure here. All right. Let me take this last question. Please refrain from questions until this exercise is over. I'm learning a lot on it. Thank you so much, Diolu. I'm also learning along with you. The second rule, okay, the second rule. The second rule, Sangameshwar. I have to take these questions because these are pertaining to the subject, all right? The rule number 2 says that wave number 3 cannot be the shortest of waves 1, 3, and 5. Wave number 3 cannot be shortest of 1, 3, and 5. All right, that is the rule number 2. All right, it is not short. Okay, it is short on the screen that I have shown you. Okay, so please look at the screen here, and I have done a labeling here. Let me know if that is correct or something is wrong. And if something is wrong, what is wrong? Please, can you identify what is wrong over here? Everybody, I'm a really amazed. I've got at least 20, 25 answer. Everybody is saying that Harsh, you are a joker. You have made a wrong count. Everybody is saying that wave 3 is the shortest. William has also said that 4 entered wave 1. That this is phenomenal. Guys, if I was there in the seminar, I would have given you a gift to everyone. All right. Wave 5 is under 1. I did not understand the last point. Wave 5 is under 1. So I didn't understand what that means. Yeah, but wave 5 is not below 1. All of you are correct. There are two errors being committed here. These are the errors. Wave 4 is entering the territory of wave 1. Ideally, it should not enter. And wave 3 is the shortest. Yeah, wave 3 is the shortest. Yes, of course it is the shortest. So it has been shorter. It should be shorter than 5. So this is an incorrect labeling, okay? Wave 3 cannot be the shortest. It breaks the rule here. So, and wave 4 enters the market, wave 1. So this is incorrect labeling. Market is not incorrect. Please listen to me carefully. Market is not incorrect. We are incorrect because we have done an incorrect labeling. Let us try, Mr. Lewis, let us try and yes, wave 4 enters sometimes. In this case, I am saying it is wrong. Tuzar, in this case, it is wrong. Yes, sometimes it is correct. So I'm not emphasizing on fourth wave right now exactly. But one big mistake is that wave 3 cannot be the shortest. So period. This is a wrong thing. But market is correct. So how do we relabel this chart? We have to relabel this chart, okay? We are running short of time, but please stay with me. I will extend the session another 15 minutes. I need to complete this before closing the session, all right? So please stay with me. Yeah, let's see what would be the correct labeling now, all right? For that, I have to tell you a story. When you can, so please reiterate rule 4 and 5. 3 is 1. Oh, that's good, amazing. So let's see. Please let's allow me to at least present what is fractal nature. All right, that is what the next slide. What could be the right count here? Before that, we need to understand the fractal nature. Please understand, smaller waves are busy forming larger waves. Please don't ask any question. Or Tuzar, all right, he's already moving one step ahead. I like this. All right, smaller waves are busy forming the larger waves. So you need to understand this now. All right. I have labeled this slightly different. 1, 2, 3, 4, 5. And then I'm labeling this as bracket 1. That means 5 waves have built the first wave of another time frame, of another degree, of another floor of the building. You remember the building and big example? So 5 waves worked to form wave 1, and then 3 waves A, B, C, they worked to form wave 2. Now, what is the fractal nature? Look at the screen carefully. Look at the first wave. 5 up. Wave 2, 3 down. Wave 3, 5 up. Wave 4, 3 down. Wave 5, 5 up. Do you understand what is the fractal nature of the market now? Wave A, if it is a zigzag, and in this case, let us assume that this ABC is a zigzag, okay? So in a zigzag, wave A unfolds into 5 waves, wave B unfolds into 3 waves, and wave C unfolds into 5 waves again. So here's how it happens. So put the first wave, we just put the first wave into microscopic view. We saw 5 waves. Remember, waves 1, 3, and 5 are motive waves, so they unfold into 5 waves, and wave 2 and 4 are corrective waves, so that they unfold into 3 waves. So it is 5, 3, 5, 3, and 5. And then again 5, 3, and 5. So what is the wave counts? The first wave count 1, 2, 3, 4, 5. So 5 plus 3 ABC is 8 waves. The second wave count on the same chart is 21, 5, 3, 5, 3, 5. That is 21 plus 5, 3, 5, which is 13, is equal to 34 waves. And if you put the smaller wave again into microscopic view, you will find out, and you will be amazed to find out, that there are 89 waves on the left hand side, that is the motive side, and then there are 55 waves on the corrective side, which makes 144 waves altogether. All right. So this is the fractal nature of the market. A and C are motives too. Yes, partially they are motive. But within that motive move, we need to understand that it is a motive move within the corrective move. You are actually getting the exact nature of the fractal market. There is a motive move within the corrective move. Now, once you start understanding this wave structure, you start enjoying the game that you are intending to play. And that is what brings us to the next screen. I have relabeled uh, as wave 1 into bracket wave 2. These are the higher degree, and then wave 3 is in progress. So 1, 2, 3. Still wave 4 and wave 5 are remaining. Why do you want to cry, Tuzar? I think you are understanding quite good. Damilair, you don't understand? No problems. I will explain again on the live chart. Just wait for a second. Okay? I think, Tuzar, you gave the answer beforehand, so you should be happy. All right. So the correct count is that market made wave 1, wave 2, and then wave 3. Please remember there are 5 waves into wave 3. So there are wave 1, 2, 3. So wave 3 into bracket is in progress. This is your wave count. All right. So again, before I go to the live chart, maybe if I'm not able to cover the strategies today, no problems, I'll cover it on the next to next Tuesday. Don't forget, I do theory and live simultaneously. Okay, not simultaneously, but one after the other. So today is theory, next Tuesday will be live session, and the following will be a theory and something like that, all right? So it's a continuous process. 5 up and 3 down, 5 waves are labeled as 1, 2, 3, 4, 5, which is a motive phase, and 3 waves down labeled as corrective. All right. How do you spot the opportunities? You apply the rules and guidelines of the wave principle and then combine it with support resistance and Fibonacci ratios, etc. You find a high potential trade setup. Let us go back on the live chart. William, Tuzar, the bracket one is nothing but I'm trying to emphasize that it is a higher degree wave count. That's all. Don't confuse yourself. The bracket one is that is wave one, wave two of a higher degree, and then wave three is working around. Now let me take you on a real-time chart and let me label the chart over there. I'm 100% sure everybody will understand why I'm putting that bracket there. See, I put a bracket here, 1. I put a bracket here, 2. Now you understand that this second wave is comprising of 3 waves, A, B, and C. Did you see that? Now wave 3 begins from this point. Alright, so I'm going to count how many waves? I'm going to count 5 waves, my friends. Here you are. Now I'm not going to put a bracket, it is a lower degree. So I'm just writing 1 over here. Wave 3, wave 4, and wave 5. Now, after 5 waves, along with these 5 waves, can I write into bracket 3 over here? Do you all agree with this? Bracket 1, bracket 2, bracket 3 is the same degree, my friends. Within that degree, higher degree, a lower degree, 5 waves were formed. 1, 2, 3, 4, and 5. Let me see the question. You indicate where does the pattern begin. The pattern begins from the highs and the lows. The tops and the bottoms is where the pattern begins. This is where the pattern begins. That is the drop wave 1, corrective wave 2. All right. They have 5 waves, my friend Tuzar. They have 5 waves. We are not able to see because it is a daily chart. If you go back, and I cannot go back on a 15 minutes chart or an hourly chart, 100% there are 5 waves movement. I'm going to show it to you wherever possible. But please remember, how do you count waves? Wave 1 followed by ABC wave 2, which is followed by waves 1, 2, 3, 4, 5, which is wave 3 now. Now I'm answering the question someone asked regarding a breakout. All right. Now if you're there with me, please understand what the breakout is. Now this wave 4 actually unfolded as a triangle. So I'm going to label this as A. A triangle is not labeled as ABC, it is labeled as ABCDE. This is a triangle. Tuzar, if you go down in time frame, you will see 5 waves here. There are 5 waves. Wave 4 unfolded as a triangle structure, which is A, B, C, D, E. If you want to draw a line, you can draw like this within the triangle structure. You connect AC and you connect B and D. That is a triangle structure. All right. This is a triangle structure, and that is a breakout. This wave is a breakout of the triangle support line. So if you extend this support line, let me extend this. Okay. This is breakout. You see, the price is breaking out of the support line, back testing the support line, which is resistance, and then dropping. So that is wave 5. Now, here I cannot show you the identification, but it is 5 waves 100% because I traded this. Can you see 5 waves here? 1, I'm not writing, 2, 3, a small wave 4 here, and then 5. This is wave 5, which unfolded again into 5 waves, my friends. So what Euro USD has done until now, I don't like the extension. I'm going to remove this now. It doesn't look good on the chart. I like my charts to be sweet and clean. I don't put more indicators, only the wave counts and a few trend lines and Fibonacci ratios, etc. So that is wave 5. All right. Now, normally after 5 waves movement, there should be a corrective ABC. All right. So the potential wave counts that I'm labeling on the chart right now is this. I'm labeling this as wave A potential. Let me put in capital now. I'm putting this as a question mark. I'm not very sure. This could be a wave B. It could be something else as well. But if this is wave B, the objectivity into my trading or into our trading now is till the time prices stay above 1.1214 or 13, we should see a wave C happening here. You will be slightly confused because on the chart I showed you different ABC, that was a zigzag. What I am showing to you right now over here is an expanded flat. An expanded flat moves like this: 1, 2, 3, 4, and 5. Okay, 5 waves down, which is followed by an A, B, C. This is what we are. This is what we are. We are here somewhere. I will tell you what is an expanded flat. Now 5 waves, I think. Yes, wave B has 3 waves potentially. So maybe another 5 waves. Okay. So this structure is most probably an expanded flat into making. And if it is an expanded flat, now what is the objectivity of the trading of the trade that you can bring out? I would draw a trend line uh, uh, two ways. One is this one, which is counter trend line. Okay, if the market breaks below this, it's gone. It's something else happening. The other trend line is the original downtrend, which is coming across. All right. So I anticipate that there is a wave C probable formation going to happen. So this is wave A, that is wave B. Maybe we are looking at a potential wave C over there for this flat structure or expanded flat structure to complete. And then probably prices may begin to drop lower. This is one objective. All right. But for that, the current support at 1.1270 should remain intact. All right. So potential stop loss would be 1.1270 and below that. And your target, how would you take your target? There are 2 ways. take a retracement of the entire drop. Okay, prices can go up to the 61.8%. Okay, so the first target is around 1.1780, that is the 38.2%, and it could go all the way towards 61.8 as well, is around 1.2076. Abhay, I think the Mr. Lewis, potentially, I will try and answer the question one by one. A and C do not have 5 waves. Tuzar, A and C. Uh, this is a 335 structure. An expanded flat is a 335 structure. All right. Mr. Lewis, ideally or potentially, yes. It's not that it could not be the time to trade Euro USD lower unless it breaks the counter trend line. Yes, Michael, no problems. I'll see you another time. Yes, Abhay, there will be a recording available on the website. Meanwhile, you promised your last lecture that you will teach the beginners. Michael, this is a beginner session. If you have any further questions you need to ask on your beginning session, please write an email to me at I have a problem. I'm giving you 2 emails here. Please mark your email to both. Okay. And I will answer your basic questions. All right. So ideally, Hudson, we are considering a daily chart here. This is a daily chart view. If prices sustain the current counter trend line or the current support, which is potentially seen at 1.1270, then we could see a counter trend rally or wave C rally towards 1.17 levels. All right, so this is just a quick technical recap on the counts that we did. We have yet to do the strategies, but I think we will bring this session to a pause here. If you have any questions, you can ask me now, or I think I've answered all the questions. Maybe we can take out the strategies next time when I'm coming here, not next Tuesday, but after that. Watch out for these series of webinars, which is done continuously by me, and I promise by March I'll be bringing up more presentations on the wave principle, and we'll be doing it more in details. Ankit, this question, I'm an educator, bro. So it's not conducive for me to talk about the trading aspects and legality aspects on the webinar. You need to please excuse me for that, my bro. All right. I mean, you look out for the regulations and all those stuff, because I'm never into trading or soliciting into trades. I'm only into education since the last 10 years. Right. I'm really sorry, bro, but it's not falling into the purview of me answering such questions in the educational basis. All right. I think, Louis, I already answered how you can enroll to the live sessions. Uh, Maybe you can do it the same way. Sakshi, yes, it can be done for indices, stocks as well, for future, anything that you want. Yes, it is applicable everywhere. The same principles can be applied everywhere. All right. So if there are no more questions, I would bring this session to a pause again, and Thank you so much for attending, and I will look forward for the next live session. And I will also discuss some trading strategies, which is left for now. But yes, Godfrey, I'll be giving you the strategies in the next live session. That is on next Tuesday, the same time. All right. Yes, yes, I'll bring up with more Elliott Wave sessions. All of you, thank you so much for your feedbacks, and do write into me to the email address that I've given to you for any questions that you have in your mind. Yes, Mr. Lewis, do not forget to write or send in an email for any questions you have. I will be more than happy to reply. Thank you so much, Sakshi, for being here. May God bless you all for being here and being such a wonderful audience. I'm going to bring this session to a pause now, and I will see you all next Tuesday, the same time, for a live analytical session. Take care and God bless. Goodbye.